price of silver is very close to the cost of digging up silver, and so it can't stay there forever. And there's one more big setup right now that we'll get to toward the end of this article. Hi, this is Mike Maloney, and today I wanted to go over an article written by Jeff Clark, and this one is How Long Can Silver Stay Cheap? And the miners share a clue. And this is based on an analysis done by a bank of the primary silver producers and how much free cash flow they're going to generate this year, 2022. And the bank's analysis is that they're not really generating that much. Therefore, silver has a floor under it. Now, I saw something, this was very similar to when I wrote my book back in 2005, 6, and 7. I was writing my book, and the cost of digging up the silver and getting that poured into a bar was approaching the value of that bar. So I said in my book that, where can you find an investment that has a floor under it that is so close to the current price? And we're back in that same position all these years later. We're back to where the price of silver is very close to the cost of digging up silver. And so it can't stay there forever. And there's one more big setup right now that we'll get to toward the end of this article. He wants to set the stage, and silver is a tiny, tiny market. So at $20 per ounce, roughly the entire estimated supply this year is worth about $20 billion. The market cap of Starbucks is $112 billion, or about 5.5 times the entire silver supply of this strategic metal. And the world cannot get by without silver. It's not possible, especially as we move into a more and more of a technological society. Solar panels have quite a bit of silver in them and such. And so a modern, clean, green, efficient world can't happen without silver. And so the primary silver market is also small. Primary is those are the guys that are out there. Their mission is to dig up silver and sell silver. And roughly 75% comes from non-silver mines. So these are copper, tin, lead, zinc mines, and gold mines, where silver is a byproduct. They're not looking for silver. They're not trying to dig up silver. But about 3 out of every 4 ounces of silver that come to market, 3 of them come from a non-primary producer. So somebody that is mining copper or zinc or something like that. This is very important for the point that I'm going to get to toward the end of this. Then he looks at the size of the market cap of the companies that produce primary silver producers. And these are diversified miners that are producing something else. Some of them may have a byproduct of silver. But you look at this, here's gold, here's silver over here, and silver is about less than a tenth of what gold market cap is. So the diversified miners is 441 billion, gold is 225, silver is 118. A little bit more than uranium. And I think of uranium as, that's a mite on a flea on a dog. It is a tiny, tiny market cap. So the primary silver producers have a market cap of 21.9 billion. Apple has cash of 179 billion. So Apple can buy all of the primary silver producers more than 8 times over with their cash on hand. And that shows you how small this sector really is. And that smallness means that it can't withstand very much capital flowing into it. If it does, it just explodes. So when you take a look at the cost of the all-in cost of production, and then you take a look at the free cash flow. The free cash flow here of all of these silver producers, they're almost all in the minus, and then the couple that are producing a little bit of free cash flow per share is very small. So this is how many dollars of cash flow they produce per share. And one of the largest miners here of silver is minus $1 per share. So they're going backwards, meaning that they either have to cut back on production, they have to do high grading where they focus on just like the core of the vein, the highest grades, instead of getting all of the silver, which means all of the silver that they're skipping while they're focusing on that core vein is very, very low grade and not worth going back to until you have silver that is priced in many, many multiples of what it is currently. And so basically the article is saying we've got to have a higher silver price, or these mines have to cut back on production. Some of them close, some of them merge. So the average all-in sustaining cost of silver producers is currently $19.33. And, silver is just a couple bucks above that right now. So here's an investment that has an absolute floor underneath it, that it can't go down below that floor and stay there. It's impossible. So you've got a downside risk that is minimized by this. It's supported, but a tremendous upside potential. And then, he talks about high grading here or mergers or things like that. But the point is that silver can't go down and stay down. We're at a point where it's impossible. Now, the other factor that's feeding into this is the inflation that the world is seeing. And silver, mining is very energy intensive. And so the cost of energy is very, very important when it comes to the all-in sustainable cost of mining silver. So if we take a look at some inflation stats, this is food, but this is the cost of a Thanksgiving dinner year to year. Now, I certainly wouldn't use canned corn, and I don't use stuffing mixes, but butter, almost 36% over last year. Flour, cranberry sauce, fresh potatoes. Yes, I love potatoes. 23% basically. I like to round figures. Turkey about 17% above last year, which was up over the previous year before. So we've got these soaring costs of mining, the largest of which, the largest component, is energy. And take a look at this energy inflation in Europe. This is quite an astounding thing here. Now, this is interesting. Norway was on the bottom. They're a big oil producer, and now they're on the top with all of this inflation. This is back in February of 2021. And Luxembourg, I've got some friends that live there, March of 2021. So now we're into the pandemic. And look at this inflation. It doesn't say if this is year over year, but I would think that that's how it's expressed. But everybody is in positive inflation numbers now. And now something interesting is going to happen. Norway peaks out eventually and then starts to fall down this list. And Sweden will eventually come up and take that number one spot. But look at this, 50%, 55% for these other countries. Norway is falling. Other countries are coming up toward the top. And the Netherlands. So they're really, really suffering in Europe. And we're at April of 2022, so we're getting close. And where is Sweden? There's Switzerland. I'm sorry, Switzerland. Switzerland up at the top, and all of a sudden, so so we're seeing 137%, 99.7, that's 100%. So prices in the Netherlands doubled over the previous year. But all of these are just extreme, raging inflation, and that is in the energy sector. And so that is the largest component in mining costs. And so what you're going to see is something playing out like, now this is that point that I was talking about that I would get to later. All of those non-primary silver producers, the ones that are digging up copper, lead, tin, zinc. Now, all of those metals, the demand for those metals is for copper plumbing pipe in housing, copper wiring in housing, castings for automobiles, lead acid batteries. That's the secondary silver producers, the non-primary silver producers. They're digging up those other metals. Now, right now, demand, ever since the pandemic, actually, demand for housing has fallen. And in like China, there's this enormous housing bubble that is popping. I did a video on it many years ago. I was expecting it to pop long before it has, but right now, I think they are in for the greatest real estate crisis in world history. But what you see here in this chart that I made on stock charts just now, this blue square is very similar to what we're going through today. My book came out right here, and I had said that silver has this floor under it. It can't go down and stay down. And what we had was the market crash of '08, when the global financial crisis hit. The stock markets dragged silver and gold down with them temporarily for a short period of time. They bounced right out of it. The stock markets didn't start rising until many months later. It was the March of '09 that the stock markets finally bottomed. The metals turned around and started rising before then, and a shortage developed in the metals. This is the spot price for futures contracts. If you were trying to buy 100-ounce bars, they were still way up here. If you were trying to buy silver eagles, they were way up here while silver was down here below $10. But it came back up to the cost of mining and started staying there. But at the same time, demand for new housing and new cars fell. There was and so the demand for new supply of copper, zinc, lead, tin, all of those things fell dramatically. And then suddenly the price exceeded its old high and it took off, and we had this rise in multiples. Well, you look at what happened here, and we had this pandemic crash that took silver into negative territory where it was below the primary silver producers, all in sustainable cost. And that cost has been rising due to inflation. You know, that cost was down in here somewhere, and it has risen substantially due to inflation. We've had the price go up and sort of stabilize and then fall, while we are seeing the real estate now is deflating in the United States. It's going to go into a full-blown crash in China. So the demand for all of these primary metals is going to plummet. The automotive industry saw its peak in 2017, and the entire automotive industry, pretty much with the exception of Tesla, who grows at more than 50% per year, the entire automotive industry hit its peak and has been falling pretty much since then. And so the demand for all of the castings for automobiles and for lead acid batteries is falling. So we're in this same setup that was in this blue box here. And I think that within the next few years, you should see silver exceed these previous highs, and this time it'll exceed the $50 high from 1980. It was actually $52.50 on the Chicago Mercantile Exchange. And so, we've had this this problem with the FTX Exchange and that token in the crypto space, and it has dragged the entire crypto space down. And I've seen, luckily, the whole time that I have been investing in cryptos, I've also been taking profits and investing them in silver, something that can't fall big time. It's got a floor under it. And the cryptos don't have that floor under it. And so they have fallen big time. But during the whole time, when I did have profits, I would do little sales, convert into physical silver. So FTX fraud. It printed unlimited tokens, and it lent out customers funds. Do you see any similarity here? I just thought this was a funny meme. And so I want to close with, the greatest weapon is not a gun or a bomb. It is the control of information. To control the world's information is to manipulate all the minds that consume it. I want to thank you for watching. We'll see you next time. At GoldSilver.com, we have a price match guarantee, free shipping, and global storage options. Thanks for making GoldSilver.com your bullion dealer.